Right. Hello, everybody. As a business editor of a newspaper, I spend most of my time listening to people who appear to have genius ideas of how you can make money from the stock market and investing. Most of them are rubbish. For the last half hour, I've been talking to these two fellas here, and they've got some of the most impressive ideas, and I think they can really transform how you can actually fill your boots investing in the markets and, buying and selling shares. So, Ruffy, tell us about yourself.
So Motif is a next-generation online broker, but instead of buying individual stocks, we want people to invest the way they think. We're in the business of putting investor expressions to work. If you can express it, we can put it to work. So I want to invest I live in Silicon Valley. There are drones flying over my house every weekend. I know drones are going to happen. I want to invest in drones. That's a type of expression. I like buying stock when people panic sell, or I might want to just emulate an endowment manager. What we do at Motif is we make these expressions actionable by turning them into a motif. And a motif is a basket of stocks thematically weighted to fulfill one of these expressions. So you can put as little as $50 to work. Our customers like to think of motifs as customizable no-fee ETFs. And when we started, it took our PhDs...
No-fee ETFs.
Sorry?
No-fee customizable...
No-fee ETFs, but we're not ETFs. You actually own the underlying securities. And when we started, it took our PhDs a year to build 80 to 100 of these motifs. And then our customers said, we want to build them as well. And in the time it took our PhDs a year to build 100, our customers built 85,000 motifs. They're now 180,000 motifs. In fact, you can go online today and get paid. So we're based in Silicon Valley. We've been on the market for about 2 years. We've been around for 4.5 years. We've raised a lot of venture money. Our prime investors are companies like Goldman Sachs, JP Morgan. And we're looking to now expand beyond the United States. We're US only. And we've announced recently that we're actually trotting into the international world now.
Right, okay. And what about you? Tell us about eToro.
eToro today is the world's largest social investment network. So we're a social network where people actually open their trading accounts and share with everybody basically their trading portfolio. So you come to eToro and you can see the track record of all of the traders on eToro. You can actually see their entire investment allocation. And we basically invented the concept of copy trading, where you can just search the top traders on eToro, and then you can copy the top traders on eToro, which means when you copy somebody, you allocate exactly the same portfolio allocation he has in his account into your account, and every time he trades now, it'll trade exactly the same time and the same price in your account. So we have people generating anywhere between 10% a year to 200% a year. And if you copy somebody and he generates in his own real account with his real money 50% gains, then you'll do the same with, let's say, the $10,000 you copied him with.
Right, okay. And I mean, it's a terrific idea, marketplace. I mean, what's the genesis of it?
So the genesis for us was starting a company is very humbling. One of the things we got wrong is we thought our early adopters would be millennials, right? Because that's what everyone's interested in. And our early adopters were ultra high net worth investors. And I made the big mistake of giving anyone who put $1 million on our platform my phone number.
Right.
And they used to call me up and say, you need to build this, you need to build that. And we couldn't keep up with the demand. And finally, I was so worried. I said, well, you think you can build it faster? Go build it. And so what's been remarkable about it, we brought into the market people like my father, who's a retired vascular surgeon. He knows nothing about investing. But when it comes to minimally invasive surgery, he knows it in his sleep.
Right.
So he can build a product, contribute his expertise onto our platform, and get a royalty if someone else builds it. So for us, it was an ability. We saw pent-up demand. We couldn't scale the business. We couldn't hire enough PhDs to build these models. But by tapping into expertise, it allowed us to scale at rates we couldn't see possible before.
Right. And what they do is they do all the work. They do all the research. They pick the shares. They kind of say if it's medical devices or some kind of thing like that. They know that sector inside out. So they...
Right. So we complement it with the motifs that we build. And then they use a set of tools that are available on our platform to make it super easy to do. Right. So they can go in and very quickly build a motif, put it out there, on social media. And again, it is this royalty model of being able to take your insight. You know, one of the things that's happening in the investing world is a lot of things are getting deconstructed. And one of the most interesting parts of the value chain for me is the notion of insight. People have ideas everywhere. How do you get people to act on those ideas? That's actually a really hard problem to solve. And more people have ideas than are able to act on them, and we're trying to balance that through our marketplace.
Right, okay. And what about you guys? I mean, where did it
When we
come
first
from?
started, what we noticed is people just love to share their ideas. And when we saw that everybody has a common interest, so everybody who opens a trading account on eToro wants to make a profit, if they're willing to actually expose their entire portfolio and show their track record to everybody, we thought that's a great common interest to actually share. And we see these amazing stories. I mean, these are people that, you know, born in the right place at the right time would earn $3 million in Goldman Sachs, right? If you look at a trader on eToro generating 80% a year, but consistently 10% every month almost, then you'd say, wow, this is raw talent. And I think the beauty of the internet is it enables to people to express their talent and actually get paid from it. So they get
But
paid.
these aren't, the people on the platform aren't Goldman Sachs star traders. It's you know, somebody who owns a local sweetie shop or something like that. I mean, it's,
So they come from really all around. Most of them have sort of some financial background, whether they worked at Deloitte or did a business administration college degree. So a lot of them understand the market, they analyze the market, they basically share the knowledge and contribute. But the majority of them are not professional money managers that work at existing firms. When we talked actually to a lot of the existing investment management firms and suggested bring in your investment managers to basically create their portfolios on eToro, they basically said, we can't reveal all of our portfolio managers' actual investments in real time on your platform. How then would we charge for basically our offering?
right, okay. And I suppose the proof's in the pudding, isn't it? I mean, what kind of returns are your guys?
So the average motif in our portfolio, remember, we're targeting to put ideas to work. We're not only focusing on the good, but even if you average that out, it's 16.3%, right? And so we've got top trending motifs. But one of the most interesting things about these marketplaces is the data that's behind it. So for example, we have an Obamacare motif. We're nonpartisan. We have a repeal Obamacare motif too.
Right.
And, but we can tell you by studying data what rich people, poor people, what they really think, Democrats, Republicans, not what they're telling pollsters, but based on where they're putting money. And we can even tell you investing behavior between people who read classics versus people who read romance novels.
Right.
We're at this stage now where the data that's out there is fueling a lot of insight into these marketplaces, and pretty soon the data itself will be more valuable than the transaction activity.
Right, okay. And what about you? I mean, what kind of returns are you seeing on the people generating?
It really ranges all around. So what we did is we put a lot of focus on basically how do you create a risk-balanced return. So any person on the eToro platform, you can see the returns, but you can also see the risk score across time. People with risk score of over 6 generally are at the gains of more than 50% a year. Then the lower you go with the risk, you see basically sort of average returns of 10 to 50. But we're seeing basically, I'd agree regarding the data. I mean, the data, the fact that we're so open with the data, because we're internet companies, is just amazing. Because you see people trading just over the last 3 days. There has been a surge of about more than 500% in the volume of Bitcoin trading in the platform. Suddenly, you see a lot of just traders trade Bitcoin in and out, in and out, in and out. Going to 500, going back to 350, you have a butterfly on you.
Do I? That's right.
Wow. Let's pause for a second for that.
Right. And you were saying that you have, there's a 19-year-old kid in Norway who's one of the star guys. Can you tell me a bit about him?
So this was a great story because he started trading on eToro about 6 months ago, a bit more. And he generated about 90% gain in his portfolio. Now, everything is public, but he's a real enthusiast. So he built also a website called Social Trading Norway and started promoting basically eToro also as a partner. And then suddenly, he got to be famous in Norway. And one of the top financial magazines in Norway published him basically front magazine, him smiling with his entire statistics and track record on eToro. And suddenly we saw in Norway this huge inflection point, right? People coming from Norway. He moved from about 200 people copying him to 1,200 people copying him. And suddenly he's managing more than $1 million on eToro and suddenly getting paid a first income from eToro.
Right, okay. And I suppose one of the things that you're doing is that you are taking on giant firms with huge skyscrapers on Wall Street. What are they doing about this? They can't, like, you...
Well, full disclosure, Goldman Sachs and JP Morgan are big investors in our company.
So they're
I think there are two things. I get asked this question a lot, which is when Silicon Valley gets unleashed on Wall Street, when it gets unleashed on, there are a bunch of things that will go away, and there are a bunch of things that will take a lot of time. And so we talked about this yesterday. Like, to me, there's huge value in the notion of insight. Right? Today, there's this whole active-passive debate. We think transaction fees will go to zero, and when they do, the value of people's insight, that is a very inherent human. Yes, data will inform a lot of decisions, but human insight, we think there's a lot to be paid. To have people managing money, we think that is a heart. We think mutual funds and how the insight gets delivered will change pretty dramatically. We've gone from mutual funds to ETFs. We're doing partnerships with insurance companies where instead of creating funds, they create motifs and they go directly to millennials on social media. So this is kind of like the Dell Direct, avoiding the channel, taking an insight model, and in this case, it's doing good, that they target to millennials. They create S&P 500 clones, wrap them around layers of fighting cancer, human rights, and they market them to millennials. And it's a very different way of taking the essence of money management, which is I have a hypothesis, let me go figure out what it is. And that delivery method is going to change a lot. And I think there's this notion of Silicon Valley disrupting Wall Street. Wall Street, I work with them. They understand how the world is changing. They have the disadvantage of having these super tankers that they're trying to veer and move, and that gives smaller companies an advantage. But for us, we've decided to partner. We've announced just last week a big partnership with JP Morgan where we're taking pre-IPO stock and delivering them to retail investors on our platform.
Right.
And so we've decided to partner strategically with Wall Street and really help drive value where everyone wins. And for us, there are definitely parts of our business that scares Wall Street. The fund management business is obviously very nervous about what we do. But there are other parts where we can actually work together.
Right, okay. I'm just looking at the kind of key issues this sector faces. I mean, presumably trust is a big one. I mean, how do you deal with that?
I think trust over the internet is very different than the traditional trust of financial institutions. People trust you when you give them a great user experience. People trust you when you communicate with them efficiently over social media. There's no doubt it takes a long time and a lot of effort to build that trust. But just earlier today, I said I think 73% of millennials prefer to see products in finance offered by Google, Apple, or technology companies rather than their banks.
Really?
So I think the financial crisis actually helped us technology companies to gain more trust than financial institutions. Right. But generally, I think people trust products when they get a great user experience, and that's really where we focus our energy.
I think what's driving the trust debate is really demographics, right? If you go look at the mainstay bank, purely from demographics, 80% of their customers are going to change over the next 20 years. And how do you connect to that next generation? And to Yoni's point, their expectations are very different. And they care about doing good. They care about how their money is invested. So if you can't explain to them, this is how I invest, this is how, there's no carbon in your portfolio, things that earlier generations sort of kind of cared about, this is almost becoming a prerequisite for the next generation investor. And for companies like ourselves, where what you see on the screen is actually what you own, versus a fund, where 4 times a year they tell you what you think they owned at that snapshot, that notion of transparency, understanding, caring about what you're invested in is the hallmark of the next generation investor.
Right. People trust technology now more than they trust people. Old finance is all about trusting somebody, giving him your money, and ask as little questions as you can, where technology is about being in control, having transparency, and being able to make your own decisions. I think that's where trust is
Yeah,
shifting.
I mean, to an extent. I think when we started, the most common question in our call center was, how do I trust you?
Yeah.
Right? And then when we added Goldman Sachs, JP Morgan, Arthur Levitt's on our board, those questions changed, and now it's like, help me invest.
Right, okay.
And so I think trust, as much as everyone thinks that, these big banks, they do provide a set of credibility, and people want to know that you're going to be around, and having strategic investors is really important for building that trust. At least that was the decision we made.
I think, by the way, both of us, we also just recently closed a round of financing with 3 of the largest banks in the world. I think generally what we saw over the past 2-3 years, so if 7 years ago the biggest banks in the world were like, this will never work, innovation will never work, now all of the banks have their innovation arms, venture funds, and they're either investing or partnering with companies like us, which I think is great because eventually it delivers to the consumer innovation faster.
Right, okay. And I suppose another thing I'm kind of interested in is you were talking about crunching data and data analysis and what you can kind of derive from that. And what are you seeing now as the key investment trends? What's working, what isn't?
Well, it all depends on day by day, right? I was talking to someone earlier at Google, and we were talking about the difference between they study search, we study money flows, right? And so what we're seeing right now is obviously because of the Democrats, Democratic donors is trending up pretty well. We were just joking before stage, death.
Right.
Money in the death industry is trending up. I don't know why. We have to look at it. And then you get to see trends like digital dollars, used cars. And one of the interesting things is we study how all our different motifs affect one another. So when oil collapsed, the Wall Street was rushing into the airline trade. And we actually went into the home improvement trade. And people go, what does home improvement have to do with a collapse in oil?
Yeah.
And those are the kinds of trends we're able to surface right now. And the advantage we have is we can put a product out the next day. So funny enough, the day after Hurricane Sandy, right, I didn't want to launch a motif. Because I don't believe in karma. I don't believe in making money off people's misery. But we were asked by a reporter to build it as an index, as a lens as to what's happening post the hurricane. And how do you track the recovery of something like that? And we gave all the money to a charity. We weren't going to make money off that. But simply using financial markets to track, we can now answer questions in very different ways. Does it pay to lobby in America? There's proof. There's a motif called Kings of K Street. We're able to answer questions using markets as data in ways that weren't possible before. And now we're able to personalize it because we know who's making these decisions. And so we're looking at predicting elections based on the election issue. Because every major election issue in the US right now, there's a motif for it. Income inequality, gay rights, women rights. And we can actually track interest in that data and use predictive model. That's kind of the next step on taking data. And what does that have to do with financial models? A lot. Because money actually is more accurate than search, I would posit.
Right. Listen, that's absolutely fascinating. Thanks very much, fellas. Right.
Thank you very much.